that also reported a weak set of numbers, Ekta. Stock is resilient somehow, though.
Yes, it's an interesting story, Mangalam, for Laurus. If somebody has been tracking the numbers, they know the kind of volatility, or they know the highs of the numbers which they delivered, especially during COVID, where they did have opportunities coming in when it came to COVID-19 drugs. Now, the largest story of Laurus Labs, just want to point out where exactly, the stock started seeing those kind of gyrations when it came to the fundamentals. I think it began when they started cutting their guidance in FY23. In FY23, they had indicated that they will miss that $1 billion revenue guidance by around 10% odd. Eventually, they didn't hit it. They cut their revenue guidance to around 6,500 crores versus 7,200 crores for FY23. They eventually closed with around 6,000 odd crores or thereabout for the entire fiscal. FY24, they said, would be a year of consolidation. FY24 revenue was down 16% for the company, and FY25, they've not provided any guidance. Now, the numbers began disappointing for Laurus since Q4 of FY23, or around a year ago, where they reported around 1,381 crores in terms of revenue and 20% in terms of margins. Remember, at one point, their margins were over 25%. So after that, as you can see, the revenue saw a decline and volatility. It's seen a recovery this quarter, and that revenue trajectory should come up for you. And it was indicative in terms of the margins as well as the profitability. So that volatility basically was on account of two segments, which is basically their antiretroviral segment as well as their contract development and manufacturing segment, which is CDMO. If you just map the trajectory of the formulations and API segment, which contains ARV, you'll get a sense in terms of the kind of volatility and decline that we saw in the past 4 odd quarters for this particular segment. And for CDMO as well, which reported around 228 crores in Q4 of FY23 and went down to almost only around 200 crores in Q3 of FY24. All this resulted in margin pressure, because at one point in time they were reporting margins of 28 to 30%. All this had come down to around 14% of margins in Q1 of FY24. So that's the kind of depletion that you saw when it came to the margins. Companies increased debt over this period of time as well. FY24 debt stood at around 2,500 odd crores compared to 1,972 crores in FY23. But if you see, the stock is down around 42% from its all-time high. But like you mentioned, it's resilient because the stock is up 50% from its 52-week low, despite all of the volatility and disappointment in terms of numbers. Valuation-wise, 41 times FY25 and 31 times FY26. So why is it resilient? Because it's one of the few companies which provides CDMO services. And the companies and, maybe the analysts are confident of the CDMO business picking up. They also have CapEx, indicative of the fact that they are themselves confident about it, around $100 million in terms of CDMO CapEx lined up. They're expecting the animal health as well as the crop science business to pick up in the next 2 years. Margin improvement should come through. They've guided to reducing leverage as well. They also have 34% stake in ImmunoAct, which is the CAR-T therapy. And I think that would be something that the street would watch out for, though they've indicated they don't want to increase stake.
That's about Laurus Labs. Thanks a lot, Ekta. Exhaustive coverage on what exactly is happening with the volatile stock. Poor numbers, with stock resilient.